JJ the CPA here. Hope you're doing well. So the employee retention tax credit ended early other than the recovery startup businesses. What do you mean it ended early? Well, the employee retention tax credit was supposed to be in play for fourth quarter 2021, but the infrastructure bill that became law in mid-November of 2021 said it's going to end September 30, and the IRS did come out and interpret that exact law. They came out with IRS Notice 2021-65. Stay with me, don't fall asleep, stay with me. In this notice, what they spell out is that if you took the money in fourth quarter, hang on, where are you going? Where are you going? If you took the money in fourth quarter, they tell you how you need to pay it back and that you do. But here's the reason I wanted you to hang on, okay? Is that even though it ended September 30, you can still go get it. It just means that any wages that would have otherwise qualified after September 30 of 2021, you just won't be able to get the credit on those wages that you paid out after September 30, 2021. But this tax credit is still retroactive back to wages that you paid on or after March 13th of 2020 through wages that you paid through September 30 of 2021. There's many ways to qualify for this. If you've been told that you don't qualify, you need to ask your advisor, could you at least tell me why? And have they looked at it recently? Because there's different ways that you qualify in 2020 from 2021. I've got a playlist that can tell you about it. I got a seminar that would even be better. But when you're talking about the fourth quarter, and if you took the money in advance, then you are going to have to pay it back, and that's what IRS Notice 2021-65 tells us. But how do we go about this? So right now, if you did get money or did take advantage of the credit in fourth quarter 2021 and you're not a recovery startup business, which I'll tell you what that is here in a minute, then there really would have been two ways for you to actually experience or get the economic benefit of or the money for fourth quarter employee retention tax credit in 2021. Two ways. The first way would be that you filed a Form 7200, which is a form that you file with the IRS, and you say, listen, I'm expecting this credit. Here's the amount. Send me a check. Well, if you did that for fourth quarter 21 and you got the money, then the IRS says in the IRS Notice 21-65 that you need to pay it back on or before the due date of Form 941 for fourth quarter, which would be January 31st of 2022. Now, the second way that you can experience the economic benefit of the employee retention tax credit is to reduce down your payroll deposit. So if you had reduced down your payroll deposit in fourth quarter 2021 in anticipation of the employee retention tax credit, then what the IRS indicates is that you do have to pay it back, and you've got to pay it back on whatever your due date would be for paying in payroll taxes if you had payroll run on December 31st of 21, even if you haven't had payroll run or won't have payroll run on that date. What does that actually mean? So for those that reduce down your payroll deposit, what the IRS says is, pretend, that's what the IRS is saying, literally almost, like, just pretend with me if you were to pay employees on December 31st of 21, regardless if you are or not, okay? But if you were to pay them, when would your payroll tax deposit be due for that payroll? For many, it's within days. For some, it's by the 15th of the month following the quarter. For some, very few, it might be the end of the month following the quarter. So there's no straight answer. And the only reason there's no straight answer is that if you reduce down your payroll deposit, what the IRS is indicating is that you do need to pay that back. And what they're going to do is allow you to have until the date that you would have to make a payroll deposit if you had run payroll on 12/31. Because if you'd run payroll on 12/31, even if you hadn't, the IRS says, then you would have withheld Social Security and Medicare and federal tax. What would be your due date as an employer to have to deposit that and pay it into the U.S. Treasury, to the IRS. Well, whatever that date is, then that's your due date to get the money in for the amount that you reduced down your payroll deposit for. You are going to have to pay it back. Now, what's a recovery startup business? Well, in IRS Notice 21-49, it is defined as, and I'm going to simplify it, a business that started after February 15th of 2020 and has less than 1 million in gross receipts in the preceding year, which would be in essence really 2020. Now, I'm going to give you a link to both these IRS notices that I have indicated here for you, but I'm glad you made it to here because I also just want to let you know, if you don't mind, I've got an employee retention tax credit seminar that you can get instant access to. It's 3 hours long, and with it, I give you the PowerPoint that you can follow along, and I give you examples. It's A to Z, how to calculate it, how to determine your head count, how to determine what quarter would qualify, reduction in your gross receipts. I give you Excel spreadsheets as well as examples and links to all the forms as well as all of the notices and instructions and the different information that the IRS has given us over time and put it all in one spot for you. And so you can get instant access to it. So I'm going to put a link to that as well. Now remember this, the employee retention tax credit, you still can get it for qualified wages that you paid to employees on March 13th of 2020 through qualified wages that you paid through September 30 of 21. So even though it ended in fourth quarter, it doesn't mean that the credit is gone and you lost out. You can still go back and get it on a Form 941, and you have 3 years from when the original due date of the Form 941 is due to go back and get it. And you don't even have to worry about what that is, because right now, if you're watching this in 21 or you're watching this in 2022, you still have time, so go and get it. All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. Have a great one.